Welcome back everyone to the Audacious Money Witch channel, where we talk about the magic behind the stock market. Just when you think your portfolio can't take another L, the market says bet. We had Honest down bad at 43%, Lululemon getting absolutely bodied for 50% year to date, and now we've got the trade desk, or TTD, plummeting over 53% this year. I don't know whether to laugh or cry, but honestly, I'm laughing. Why? Because I took some serious profits on this stock a few weeks ago, and now I want all my shares back for the low price. And I'm about to get my chance, but first, we need to understand, why did Wall Street just tank this stock again? The tea is hot, and we're spilling it all. The TTD collapse, 2 reasons for the historic L. Okay, so TTD just got absolutely bodied, dropping a wild 39% in a single day, their worst day on record. This is a historic L, and Wall Street is freaking out over 2 main reasons. First, the leadership drama. Their CFO, Laura Chenken, suddenly slipped away, and while they named a new one, Alex Kayal, the vibe is just off. This isn't the first time they had a shakeup in the leadership either. It's giving unstable. But the real reason, it's the big Amazon. Amazon's ad business just keeps getting bigger, and analysts are worried their moves will erode TTD's value over time. We're talking about Amazon striking deals with Roku, launching NBA Live Sports, and this isn't even touching on their plan to make Prime Video ads a dominant force in the CTV space by 2027. This is a full-blown war, and Amazon is bringing in the tanks. The ultimate market prank, S&P 500 and the crash. Can we talk about the ultimate market prank? The trade desk got added to the prestigious S&P 500 just 3 weeks ago. It's supposed to be a sign of success.
We've got a news alert on an addition to the S&P 500. Pippa Stevens has got the details. Hey, Pippa.
Hey, let's take a look at shares of Trade Desk surging here 11.5% after S&P Dow Jones Indices said that it will replace ANSYS in the index effective prior to the opening bell this coming Friday, July 18th. This, of course, comes after Synopsys got that approval to buy ANSYS, and TradeWeb here up nearly now 12% on the news.
But the market's like, psych.
All right, let's move on. Shares of online ad tech company Trade Desk are plummeting this morning. The firm is warning about the impact of tariffs on its customers. Julia Borson has those details for us. Julia.
Hey, good morning, David. Well, shares are now down about 39%. Despite the company beating its second quarter estimates on the top and bottom line, analysts pointing to 2 main issues: the impact of tariffs on the macro environment, as well as growing pressure from competition in Amazon in particular. Trade Desk CEO Jeff Green saying the big companies trade desks work with are disproportionately impacted by tariffs.
This is kind of ironic, chaotic energy that could only happen in the stock market. It's a total humiliation, and it's fueling the negative sentiment. The CEO's vibe check, denial, or delulu. Now, TTD CEO Jeff Green was asked about the Amazon elephant in the room on the earnings call. And his response, it was a choice. He basically said Amazon is not a competitor, and Google really isn't much of a competitor anymore either. He's trying to argue that TTD is a neutral seller of ads, unlike Amazon, which sells its own ads on Prime Video. In his words, "We don't grade our own homework." He even floated the idea that Amazon might one day let companies like Trade Desk sell ads on Prime Video. It's giving major optimistic, but maybe delusional energy, and analysts were not buying it. The macro mess trumps tariffs and the slowdown. Now let's talk about the other big mess, the macro headwinds. We've got President Trump's tariffs causing major anxiety for Trade Desk's main customers, big and global brands. Trade Desk CEO Jeff Green admitted that their core clients are feeling the pressure and are getting cautious with their spending. This is where the Trade Desk business model actually becomes a weakness. Unlike other ad tech companies that focus on smaller businesses, Trade Desk is all about those big brands, which are getting hit the hardest right now. This uncertainty is making Trade Desk's growth slow down. They beat expectations for Q2 with a decent 19% growth, but their guidance for Q3 only 14%. Wall Street was expecting a comeback, not a slowdown. And that's why they're getting punished. Analyst disrespect, in denial, and the Amazon shadow. Now let's get into the analyst drama. Because the disrespect is real, Wall Street is definitely not buying Jeff Green's vibe. Lightshed analysts had the absolute harshest words, writing that Green is either in a serious state of denial or he is living in an alternate reality. Oof. Michael Nathanson said that Amazon shadow over this stock is now front and center and harder to deny. He even went as far as to cut his rating to a sell, with a new price target of just $45. The core fears are all about the connected TV ad market. It's getting super crowded with giants like Amazon, Netflix, and Disney+. A Morgan Stanley report even predicts Amazon's Prime Video will dominate smart TV advertising by 2027. And the bigger fear, the ad pie itself might not be growing as fast as we thought, meaning all these big players are fighting for a smaller slice. But that's certainly not the case because of the cord-cutting trend is not going away.
Some of the world's largest brands are absolutely facing pressure and some amount of uncertainty. Some have to respond more than others to tariffs. Many are managing inflation worries, the related pricing that comes with that. Now, we've seen 4 downgrades at least of the stock this morning. MoffettNathanson pointing to the impact of Amazon's growing digital ad sales platform, drawing advertisers to reportedly move over significant portions of their ad budgets, while Amazon's deal with Roku will provide more ad inventory, and Amazon Prime Video is launching new NBA programming, saying, quote, "The Amazon shadow over this stock is now front and center. It seems inevitable that Amazon's momentum will become more apparent even to the trade desk's die-hard bulls." Now, Wedbush also downgrading to neutral, writing, quote, "Amazon is now unlocking access to traditionally exclusive premium ad inventory across the open internet, validating the strength of its DSP and suggesting the trade desk's value proposition could erode over time." Back over to you.
Julia, what do you think is the read-through for the broader media industry here? Do you think this is idiosyncratic, or is there more to be concerned about?
Well, what's so interesting is that this is in contrast to what we heard from Pinterest just yesterday about the fact that the ad market is actually stronger than many had feared. And I think what we're seeing with companies like Pinterest or Meta is that they are very much exposed to the small and medium-sized advertisers as well as the big advertisers. And maybe, and this is what we heard from Jeff Green, the CEO of the Trade Desk, is that maybe those SMBs, small and medium-sized advertisers, are less exposed to tariff concerns than the big brands are. And so if you're able to spread out your ad exposure really, really broadly, you're going to be able to see more strength. One thing we also heard from the likes of Pinterest that we did not hear as much from the Trade Desk is that AI is really helping these other platforms deliver results for their brands in a way that we haven't heard that from the Trade Desk.
The Palantir parallel is Trade Desk the next 10x stock. But I think all of this is missing the bigger picture. I'm calling it the Trade Desk can be the next Palantir. People love to say that NVIDIA's Omniverse is competition for Palantir's Foundry, right? But what did Palantir do? It outperformed everyone, even overshadowing NVIDIA this year. Why? Because the market eventually realized that despite the competition, Palantir's business model is unique and powerful. I'm saying the same thing is happening here. Amazon isn't a threat to Trade Desk, just as NVIDIA isn't a threat to Palantir. This isn't about direct competition. It's about two different massive business models coexisting in the same space. Remember back in mid-2023 when Palantir's revenue growth dipped? The stock dropped to around $15 a share, and what happened? It was the perfect opportunity to load the boat before it went on a historic run. I am saying with a 40% drop in one day, we are at that exact moment for the Trade Desk. My final thoughts, the price I'm loading up at. So here's the thing. We've seen this movie before, just a couple months ago. Analysts were hating on Google, saying the future of search was fading. And what happened? The stock came roaring back anyways. This is a perfect example of why you can't always trust the haters when a quality company hits a rough patch. The analysts will always present their bearish takes, but if you listen to them, you can't make that 10x money. What we need to do is find a couple of wonderful companies and hold them for a long, long time. When there are dips, we buy them. When there are market crashes, we take advantage of them. Right now, the trade desk is only selling for around $26 billion market cap. Palantir is over $400 billion. That's almost 20x difference. I believe trade desk can get there. This is the biggest discount on record with no fundamental change in the business's core strength. It's just macro weakness that will pass in time. This is the perfect opportunity to buy a quality momentum stock like Trade Desk for cheap while everything else is overpriced. So where does this stock bottom out? Where's the price I am waiting for? Given the current chaos and the analyst price cuts, the target of $40 to $50 seems plausible. It seems to want to head down there. This feels like a full circle moment. I was early on this stock. I took my profit around the $90 mark, and now I'm ready to come back and load up. I'm going to start dollar cost averaging into this around those levels because a market correction will only take this stock lower, but the long-term vision is still there. This is a rare opportunity to buy a quality company like Trade Desk that's getting wrecked by a bad narrative. I am extremely excited about this opportunity. Woohoo! So what do you think? Are you buying this dip or is it a falling knife? Let me know in the comments below. And don't forget to like this video and subscribe so you don't miss our next deep dive. Peace out, everyone.